Britain's money empire didn't collapse overnight. Invisible cracks grew for decades, hidden beneath the surface of global stability. What happens when the world's most trusted currency quietly starts to rot from within, while everyone still believes it's unbreakable? This is the story of how the pound sterling lost its crown. London, 1919. The city pulses with power. Ships unload goods from every continent. Bankers in top hats orchestrate trades that ripple across the globe. The pound is the world's reserve currency, backed by empire, gold, and centuries of trust. But beneath the marble columns, something is shifting. Most believe reserve currencies fail only after disaster, war, revolution, or sudden collapse. But Britain's decline began long before headlines caught up. The warning signs were subtle: mounting debts, secret promises, and a slow erosion of confidence that no one dared to name. Today, as the world debates the future of the dollar, the hidden story of the pound's fall offers a chilling lesson. How does a money system built on trust and power start to unravel long before the world admits it's happening? In the next minutes, you'll see exactly how Britain's financial dominance eroded from within, exposing the invisible red flags that every reserve currency faces and the fatal mistakes that still echo in today's global money system. The obvious story says Britain lost its monetary crown in a single moment, perhaps the day it abandoned the gold standard or when the dollar took over at Bretton Woods. But the truth is far more unsettling. Decline is a process, not an event. For decades, the pound seemed untouchable. British banks financed railways in Argentina, insurance in India, and trade from Shanghai to Cape Town. Sterling was the lubricant of global commerce, yet each transaction quietly wove a web of hidden obligations. The real threat wasn't a single shock, but the slow buildup of promises Britain couldn't keep. War debts, imperial guarantees, and the pressure to maintain appearances, these forces gnawed at the foundations of trust, even as the world kept using the pound. What if the most dangerous moment for a reserve currency isn't when panic erupts, but when confidence becomes a liability, forcing policymakers to double down on illusions of stability? This documentary isn't just about Britain's past. It's about the hidden mechanics that can quietly dismantle any dominant money system, revealing warning signs that matter now as much as then. By the end, you'll know the exact mechanisms that doomed sterling's supremacy and why the world's most powerful currencies are never as safe as they seem. At its core, a reserve currency is a promise that anyone, anywhere, can trust its value and convert it freely. But this promise is only as strong as the system behind it: networks of banks, flows of gold, and above all, the belief that the issuer can always deliver. Britain's financial empire ran on three pillars: global trade, the City of London's banking dominance, and the pound's link to gold. These created a self-reinforcing loop. Confidence bred usage, usage bred more confidence. But the loop could also run in reverse. The first crack appeared with World War I. Britain financed the war by borrowing, especially from the United States. By 1918, the UK owed billions in dollar-denominated debt, a hidden liability that would haunt the pound for decades. After the war, Britain faced a brutal choice: restore the gold standard to signal strength or admit the pound was weaker than before. In 1925, Winston Churchill chose to return to gold at the pre-war rate, overvaluing sterling and squeezing British exports. This decision looked bold, but it masked deep fragility. Foreign investors, reassured by the gold peg, kept using sterling. Yet British industry struggled, unemployment soared, and the Bank of England quietly burned through gold reserves to defend the illusion. Meanwhile, the empire's financial machinery created new risks. Sterling balances, credits held by colonial governments and trading partners, ballooned during the interwar years. These were promises to pay, but Britain lacked the gold or dollars to honor them all at once. Every time Britain papered over a crisis, by borrowing more, restricting capital flows, or making secret deals, it deepened the system's hidden rot. The pound's apparent stability depended on no one testing its limits too hard. The mechanism was simple but deadly. As long as everyone believed in sterling, the system worked. But if trust faltered, the sheer scale of Britain's obligations, war debts, imperial balances, and gold shortages could trigger a chain reaction. This is the paradox of reserve currencies. Confidence is both their greatest strength and their fatal vulnerability. The more the world relied on the pound, the more catastrophic any loss of faith would become. So, how did these invisible cracks finally become impossible to ignore? To answer, we turn to two pivotal episodes, moments when Britain's hidden liabilities collided with reality and the world's trust in sterling began to unravel. Case Study 1. The Return to Gold, 1925. After years of post-war inflation and uncertainty, Britain's leaders were desperate to restore the pound's prestige. Churchill's decision to peg sterling to gold at its old value was hailed as a triumph of discipline. But beneath the celebration, the numbers didn't add up. British exports became uncompetitive, unemployment rose, and gold reserves dwindled. The Bank of England was forced to borrow from France and the U.S. just to maintain the illusion of strength. Foreign investors, sensing weakness, began to test the system. Each time the bank defended the pound, it lost more gold. The government imposed austerity, but confidence kept slipping. The gold standard, meant to signal stability, became a trap. By 1931, the pressure was unbearable. Britain abandoned the gold standard, devalued the pound, and shattered the myth of sterling's invincibility. The world's trust was shaken, but the deeper liabilities remained. This episode revealed a crucial warning sign. When policymakers cling to old symbols of strength, they may be hiding structural weakness. The cost isn't just economic. It's a slow, corrosive loss of credibility. But the real reckoning was still to come. As another world war loomed, Britain's financial promises multiplied, and the pound's hidden liabilities grew even more dangerous. Case Study 2. The Sterling Balances Crisis, 1945-1947. By the end of World War II, Britain owed not just the U.S., but its entire empire. Sterling balances, credits held by India, Egypt, and other colonies, had swelled to over $3 billion, dwarfing Britain's reserves. These balances were supposed to be as good as gold, but Britain couldn't convert them without draining its last reserves. The 1946 Anglo-American Loan Agreement brought a lifeline from Washington, but with strict terms, sterling had to become fully convertible. The result was a disaster. As soon as convertibility began in July 1947, holders of sterling rushed to exchange their pounds for dollars. Britain's reserves evaporated in weeks. The government was forced to suspend convertibility, shattering any remaining illusion of sterling's global power. The world had moved on. At Bretton Woods, the U.S. dollar, not sterling, became the anchor of the new financial order. Britain's money system, once the backbone of empire, was now a relic, propped up by capital controls and fading memories. This crisis exposed the final mechanism of decline. When hidden promises are called in, even the mightiest reserve currency can unravel almost overnight. But the decay was years in the making, hidden behind layers of trust and denial. As we move forward, the question lingers. What warning signs did Britain's policymakers miss? And what lessons do they hold for today's global money system? The unraveling of sterling is not just history. It's a map of dangers that still haunt the world's dominant currencies. Behind closed doors, British officials scrambled to patch the system. Each new promise, to allies, to colonies, to creditors, added another invisible weight. The pound's prestige masked a growing reality. Trust was now measured in dollars, not gold or imperial loyalty. Sterling's defenders tried to buy time with capital controls and diplomatic appeals, but every restriction sent a signal. The pound was no longer truly global. Confidence, once automatic, now had to be managed, sometimes with secrecy, sometimes with force. The 1947 suspension of convertibility was more than a technical failure. It was a public confession that Britain could not meet its obligations. The world's reserve currency had become a local currency, its reach shrinking with every crisis. As the sterling area fractured, former colonies and trading partners quietly diversified into dollars. The pound's network, once its greatest strength, became a web of liabilities. Each exit made the system more fragile, accelerating the unraveling. In the background, the U.S. Federal Reserve and Treasury watched closely. The dollar's ascendancy was not just economic, but institutional. America offered liquidity, convertibility, and, crucially, confidence that Britain could no longer guarantee. By the late 1960s, repeated devaluations and emergency loans revealed a pattern. Every attempt to defend the pound required more external support, more hidden deals, and more political compromise. The illusion of control faded with each episode. What began as a slow erosion turned into a feedback loop. The more Britain tried to defend sterling, the more the world doubted it. Each intervention bought time, but at the cost of credibility and freedom of action. The final blow was not a single event, but a series of choices, forced by debt, by dwindling reserves, and by the relentless logic of global trust. Britain's money system unraveled in plain sight, yet the true collapse had been years in the making. Today, echoes of sterling's decline ripple through every debate about reserve currencies. The world's dominant money still relies on trust, liquidity, and the willingness of others to hold its obligations, often for reasons that seem unshakable until they aren't. Modern policymakers face familiar pressures, rising public debts, foreign holders with diverging interests, and growing alternatives. The mechanisms are more complex: swaps, digital flows, globalized finance, but the core tension remains the same. When a reserve currency's credibility is questioned, the first cracks are rarely visible to the public. Instead, they appear in subtle shifts, central banks hedging their reserves, trade partners demanding alternatives, and capital quietly seeking safer ground. The pound story is a warning against complacency. No amount of tradition or past dominance can substitute for the daily, lived reality of trust. Even the strongest system can be hollowed out by hidden promises and mounting obligations. As new powers rise and global trade patterns shift, the incentives to diversify away from any single reserve currency grow. The process is gradual until a moment of stress reveals how much has already changed beneath the surface. Britain's experience does not predict an inevitable outcome for today's reserve currencies, but it does reveal the warning signs: hidden debts, eroding confidence, and the slow migration of trust to new institutions and new promises. Most people imagine reserve currencies fall in a dramatic crash, but the real danger is the slow, almost invisible decay, when obligations quietly outgrow resources and the system's defenders become its greatest risk. Britain's policymakers believed that prestige, history, and the machinery of empire could hold the system together. What they missed was how quickly trust can migrate when incentives change and alternatives emerge. The pound's decline was not just about numbers on a balance sheet. It was about the network effects of confidence. When enough participants quietly hedge, the system's foundation weakens long before the world notices. Hidden liabilities, like sterling balances, are rarely discussed until they become unmanageable. By the time they surface, options are limited, and the cost of restoring trust is far higher than anyone expects. The lesson is not that reserve status is doomed, but that it is always conditional. It depends on the willingness of others to keep believing, even when incentives suggest otherwise. In the end, the pound's fate was sealed not by a single crisis, but by a series of overlooked trade-offs between short-term stability and long-term credibility, between secrecy and transparency, between defending the old order and adapting to the new. The pattern that mattered was slow, systemic decay, masked by official confidence and hidden by layers of financial engineering. Britain's money system lost its crown not in one night, but through years of accumulating promises it could not keep. People missed the warning signs because the system still functioned, until it didn't. As long as the pound cleared trades and settled debts, it seemed unbreakable. But trust had already migrated, and the final reckoning was only a matter of time. The most important warning sign is not the headline crisis, but the quiet buildup of external liabilities and the growing need for controls. When a reserve currency must be defended with restrictions, the world is already looking elsewhere. Modern financial powers should heed the lesson. Credibility is not a static asset. It is rebuilt or eroded every day through choices about openness, debt, and the willingness to honor promises without delay or excuse. Britain's slow unraveling is a map of dangers for any dominant currency. The cracks appear first in trust, then in liquidity, and finally in the desperate measures taken to hold the system together. The final insight: Reserve currency power is not lost in a single moment. It is surrendered piece by piece as trust migrates and obligations outpace resources. The warning signs are always there, if you know where to look. Which warning sign from Britain's decline do you think is most overlooked in today's global money system? Share your thoughts below. For a deeper look at how reserve currencies rise and fall, watch our documentary on the dollar's ascent or explore our playlist on hidden financial systems. Subscribe for more premium economic history delivered without noise.